3,000 or 4,000? What makes more sense to you?
Well, I'm a bull, Scott. Look, I don't think we've seen sufficient deterioration to think that this bull market rally has run its course. We pull back exactly to where we need to really hold the uptrend from October. It's about a 50% exact retracement in both price and time to the move up from late December. This whole narrative shift over the last couple of weeks with the stronger economic data has caused sentiment to get worse and worse and worse. And so now we're actually approaching pretty bearish near-term sentiment levels. And look what's just happened in the last 24 hours. Now we see Treasury yields starting to roll over. And that is specifically what investors need to be watching to think that this market likely can extend. The market meaning both the bond market, but also the stock market, in my view.
Wait, so you think rates may have topped for at least the near term again?
There's certainly enough evidence when you look at just the trend over the last few weeks and getting down. We're at, 387 today. If we break earlier week lows 384, then that's going to jumpstart a pretty big Treasury rally over the next couple months. And I think equities get up towards 4,200. Above that could get up towards last August highs, 43.25 or so. So, I think, look, we have weekly momentum clearly in place. Breadth is actually in very good shape. Now we're combining that with skepticism, with pessimism. Everybody thinks, the central bankers are so hawkish, we have to continue to hike. Well, rates might not do exactly what they're saying. We're actually seeing evidence that they can peak out here and roll over. So if that happens, equity markets are going to rally.
You want to take a stab at this, Mike? You look at the internals. Brett, does it look good to you like it does to Mark?
In general, it has looked good. So that's kind of built up this base of, benefit of the doubt that you might be able to give the market at these levels. Valuation's not compelling, but it's also not going to be fatal to further upside. Keep pointing out that outside of the very largest stocks, the valuation's really not that challenging. And I also don't think that it's the level of rates that corresponds to a particular index level. I keep pointing this out. We were at 4,000 the S&P in May of last year, and we were at 3% on the 10-year. So it's the speed of the move. It's what it means about whether we're chasing inflation or not. Real rates are now actually, pretty generous at this point. Arguably, bonds become a good buy. Maybe that means that yields can hover or come in a little bit.
And Mark, you mentioned this sentiment shift. I think with the way that you characterized what we've seen over the last couple of weeks. It's been justified, hasn't it, though? You got that really strong employment report, and that made everybody sort of stand up and say, uh-oh. Yeah, you know what that means? More hikes and higher for longer.
Well, that's the entire point, Scott, is that when everybody leans in a certain direction, you generally don't want to be there for very long. Look, you saw the equity put-to-call ratio hit the highest levels of the year yesterday at 0.80. AII sentiment is now back to bullish. The CFTC data with large specs are still very negative, minus 200,000 short S&P contracts. And you actually see CFTC data also being quite negative for treasuries also. The lowest levels we've seen, the highest levels we've seen in shorts for almost 4 years. So that's interesting to me. It means that people clearly are all betting that rates are going to go higher and that stocks should go lower. I like to take the other side of that, So in the words of Trey Anastasio and Tom Marshall, everything's right, so just hold tight. I think we move higher. And in general, weekly momentum and breadth support my view. I think we're going to be fine. And really any further pullback that causes sentiment to get even more bearish, that's going to create a really good opportunity. I don't think S&P gets below 3,900. Today's move looks important, but it's really 4060 that we need to get above. Above that, we can really start to accelerate higher. So, I like technology. The move in semis today continues to be very, very good. The majority of your polls suggested people don't want to buy NVIDIA. Well, the SOX is showing tremendous strength. It's the best part of technology. People need to be in semiconductors, and increasingly they're going to want to be in counter-trend pullbacks for groups like energy and also healthcare. They're going to start to look a lot better in the months to come.
Well, we've got a lot of negativity on the program today from many people, but Mark, I appreciate you bringing that different perspective to us. I think we'll be fine. Technology, like semis, good. I mean, does NVIDIA's strength today speak for all the semis?
I would say it doesn't speak to the strength in all the semis, but it is feeding off of a reset in attitudes about the group. I was saying earlier, the consensus price target on NVIDIA is right where the stock is right now. It's 236. You know why? Everyone was too bullish when it was way higher a year ago. They kind of cut their estimates. Expectations came down. So that process, I think, can support things for a while. Also seen some data about outflows from S&P in ETFs as well as the QQQ over the rolling last 2 or 3 months. it's reached actually kind of extremes to the point where you'd say that people are not all in. So yes, there was a big grab for risk at the beginning of this year. You've talked about the short covering element of that, but also a chase. People definitely thought that they kind of found the old magic in some of these old stocks again, but it faded quickly. In other words, as soon as the market stopped going up, as soon as the high growth speculative names rolled a little bit and gave back some of the gains, you did have people back away from those bullish bets.
If Newton's going to be right with his call, which is certainly more bullish than many, does he need technology to perform well to get him to where he thinks we can go?
It's the shortest path. You need the big growth stocks to work to some degree to get there. Without it, you sort of, a lot more has to go right in terms of other sectors. I still keep pointing, though, to more traditional cyclical areas that have kept afloat. Home builders, maybe they shouldn't, but they've been outperforming.
Industrials, if you're worried about the economy, how many days have we talked about industrials hitting new 52-week highs or even new all-time highs?
Truckers, industrials, and industrial metals, things like steel and copper. So, again, that market, those could be head fakes internally, but they can't all be false moves.
Yeah, well, important or not, closing above 4,000 on the S&P is going to be viewed by some as very important. And we'll see. We look like we're going to do that. I'll see you tomorrow. It does it for us.